Josh Crumb, gold is up about 26% so far this year. After Brexit, it had a nice 6 percentage point bump. What's your outlook for gold coming this fall? And I know you wear gold-colored glasses, but tell me what you think is going to happen.
Yeah, so I think what's important to understand is gold is all about expectations. It's a money stock that's being valued relative to a currency stock and expectations. So for the last couple of years, the expectations was exiting monetary policy, raising rates, and what we got, coming in, between China and the oil and credit problems in Q1. We realized that it's going to be very hard to exit this liquidity trap. And so that's when the market revalued gold back up to where we were a couple of years ago. And I see that same asymmetry still, in that the greater risk is still to the upside than the downside.
Well, we may get a Fed rate hike this fall. How do you think that's going to affect gold? You think this is just a one and done, so it's not going to hurt too much?
I think it doesn't hurt that much because when you talk about gold, you're talking about real interest rates. It's nominal, less inflation, and to get even to the PCE of 1.8, they have to have a lot of rate hikes, and I think that's going to be very difficult to get to. So you're going to continue to have negative real interest rates.
And one of the other things that's driving gold in this latest cycle is people are worried about currencies. You saw post-Brexit, as I said, you saw gold pop 6%. People are worried about currencies all around the world, currency volatility.
Right.
That's helping you.
Yeah, I mean, at the zero bound, our currencies have now become more volatile than our economy. We have swings like Brexit. I mean, how many currencies have been devalued in the last 6 months from Brazil to Nigeria and many in between. So I think this currency volatility is still only the beginning, not the end.
And you're from Goldmoney. You are trying to democratize or give smaller investors a way to not only buy things but pay for things in gold. So it's unique. Why don't you talk about it?
Yeah, thank you. Yeah, so for us, a lot of high net worth investors, many of them are famous investors. They're our shareholders. They understand how to buy gold. They can buy the ETF. They can buy it with their private banker. But for us, we're really just like anything in technology. We're trying to get it to the little guy on the street for the same wholesale prices. Very simple. So with our platform, you can buy $100 a month. Just like you used to put into a savings account. Back when they had interest rates, and you remember when you used to have a savings account. So that's what we're really after. But we also want to make it accessible and basically be able to spend with a MasterCard.
All right, and then finally, because prices have been moving up for gold, I'll assume that more supply is going to come on as prices rise. So how will this affect your forecast?
So we don't think about it like a flow commodity like oil or grains, where you're really dependent on short-term supply and inventories. Almost 8,000 years worth of gold accumulation is still sitting in vaults. You've got the entire stock of history's gold. So the year-over-year supply really doesn't matter. What matters is the replacement cost and the commodity, the store of value cost of gold. So sure, if gold goes up, you're going to get incrementally more supply. But I think the demand as a safe haven is going to continue to outstrip that as long as we're in experimental monetary policies indefinitely.
All right, well, thanks a lot for coming on and talking about it.
Yeah, thank you. Thanks for having me.
And thank you for watching The Street.